So good morning, everyone, and welcome to this Access to Innovation talk, where we will focus on commercial lending for development of the East African agriculture sector. And the reason we have chosen to focus on this topic is that many of our company members often experience that their products and services can add values to stakeholders in the agriculture sector. And often there's actually a good business case for this. But the East African business-to-business partners, that being farmers or companies, cannot mobilize the capital to invest in these technologies. So hence this challenge. But fortunately for today's session, we are in the good company of Dr. Andrew Temu, who have spent decades working on with East African lending and finance institutions. And he will share his knowledge on the challenges and opportunities posed by monetary policies and banks as they experienced by local farmers and companies. So Andrew, thank you very much for helping us out with this complicated topic. As for the format of today's session, we start with a 25 to 30-minute presentation from Dr. Andrew, followed by 15 minutes where you can ask your questions. For the questions, please raise your digital hand or post a question in the chat. I should also say that we are recording this session, which will be available on our website for streaming at a later occasion. I think that is it from my side. I'll hand over the screen to you, Andrew, so please go ahead.
Thank you very much, and good morning to everybody. Let me try and first share the presentation so that I can continue in an orderly manner. To share. And I'll switch off my camera to improve my bandwidth at this end. Slideshow and from presenter's view. I hope you can see my screen.
We can.
Yeah.
Perfect.
Thank you very much. Good morning, everybody. And thank you very much for inviting me to share what I know and some insights to the nature of challenges and possible approaches and opportunities to access commercial credit for agribusiness in East Africa. I'll focus on East Africa in general, but when it reaches to giving examples, you will bear with me. I'll do a little bit more for Tanzania, but I've tried to select examples which I believe they are similar or near similar cases or facilities or services or monetary policy aspects in the other East African countries. The challenges that members of this association or group have focused are real on the ground. And you can note that traditionally there are three most commonly and traditionally referred to as East Africa. Yeah, these are Tanzania, Kenya, and Uganda. But as you know, we now have DRC, Rwanda, Burundi, and I also hear discussions about an application to join by Somalia. But I'll concentrate very much with what I know in Tanzania, Kenya, Uganda, a little bit about in Rwanda, if at all I get time for that one. But I have projected also Zambia for purposes of a little bit of a comparison of a very unique case. Overall, lending to agriculture is low. If you can see at the graph, the yellow bar tries to show the percentage of commercial lending which goes into agriculture, far below 10%. And there's no clear correlation between the percentage of sector contribution to GDP with the commercial lending. And it's not proportionate also. I do remember some time ago when we were complaining about this, I was asked a question, but Andrew, how much do you want it to grow? And I said, if at all, 30% of commercial lending in an economy is just proportionate to the GDP contribution, I'd be comfortable with that one. And then we have to dig in on how much growth we need. I would try to call your attention to the case of Zambia there. And you will note that this is a very, very unique case. The share of the agricultural sector's financing by the banking sector there is high, and it is very unique. But if you dig deep into it, it is relatively small number of very large commercial farms. And they are, if you count them, there are only 1,500 who are receiving a bigger chunk of the lending, while less than 5% of small and medium scale farms, approximating to the tune of about 500 different enterprises, have no access. Okay, and in most of these East African countries, you have two ends which are enjoying. The very small farmers do get credit and access finance from informal sources, and the large farms have easier access to commercial lending. So there is a missing middle. The small and medium enterprises at the middle are the ones which are suffering most. And the problem is not that commercial financial institutions lack liquidity. In that I mean they are capable of mobilizing savings and capital from the financial market. They are often very, very liquid. The real problem is a systematic institutionalized bias against agriculture, primarily because of elements of the monetary policy and largely because of operational inabilities of these traditional banks. They lack the relevant knowledge of agriculture, comprehension of value chains, and fall short of relevant and appropriately designed and tailored products. You can note that the personal loans is the one which enjoys the most. And this trend is like that for a number of years. I've only picked 2 years there. And this is data provided by the Bank of Tanzania, the central bank. If you pick Kenya and Uganda, the figures won't be very much different. So occasionally in Kenya, probably trade and manufacturing would have a little bit more of receiving commercial lending, but agriculture stays almost at the same place, below 10%. And the pattern is almost the same for about 5 years. And there are quite a number of challenges which I am presenting them for purposes because if you understand them the way they are, it is possible to comprehend also the suggestions and propositions which I make on how the enterprises on the ground can go about. The first one is the strategical operational limitations. And mainly it is the rural nature of agriculture, because most of the borrowers are rural areas, so the systems within the financial institutions are designed to respond to the majority. And therefore, some enterprises which have higher commercial acumen, are well designed, are structured, they're registered, etc., they fall victim of the generalization which the financial institutions make. And these elements are the things like high cost of serving the rural population, a limited physical presence like very few branches, products which are designed generically for very traditional agricultural systems, and their low ability of the financial institutions to do creditworthiness assessments. And most of the lenders who are very active in the agriculture sector, you find them confined to value chains which they have comprehended over many years, like coffee, cocoa, tobacco. And I'll give one example of NBC and why they would stick to those ones. But generally also, you notice low understanding of agriculture, especially agribusiness enterprises and their associated risks within the bankers. Sometimes we experience sector-specific challenges like the biological nature of agriculture, pests, diseases, and short shelf lives of the commodities. These end up classing agriculture as very risky, but also price volatility and some challenges like penetrating international markets where there are demands like phytosanitary and also traceability requirements, etc. When the bankers, and it is from the banker side, when the bankers look at all this, they tend to rate very highly the risk which is there in the sector. But there are also monetary policies which are a problem. And one which is very common, almost everybody in the room might have heard about, is this issue of collateral, where it's only landed property which is acceptable, and also the valuation. there's definitely a need to accept alternative collateral, example, stored products, equipment, machinery, chalets. Okay, there's also need to revise the discount factor which they place on financial institutions which place on these assets. Okay, many of development enthusiasts in Africa believe that the economic benefits of lending to agriculture much outweigh the risks which are there, but this one has to be appreciated by the banks also. And collateral valuation, you will always find that they are always overvalued. And basically, it is to cover the discount factor for rural assets. So banks would require 120 to 150% value of assets as collateral to cover for a loan which they are giving. And there are some other factors, let's say, for example, an estimation of expected credit loss. This is a requirement of IFRS 9, International Financial Regulatory System, number 9. And basically, it came on board as a response to the 2019 bank failures, okay? And it requires banks to make provisions based on expected loss. In the past, using the IAS 39, banks were estimating on the actually experienced loss. There are also some other factors like the statutory minimum reserve and capital adequacy ratios. And these are a problem because banks are required to set aside a percentage of their capital in relation to their risk-weighted assets. And when loans are extended to agriculture, which is rated very high, you end up seeing that the capital is rated very, very risky. And there is a correlation. The higher the statutory minimum reserve requirements and capital adequacy correlates very, very strongly with low lending, which goes to agriculture, because agricultural loans are rated highly in terms of risk. There are some other reasons like the guarantees are not being treated. If at all you try to strengthen the collateral by adding some guarantees are not treated very much like de-risking agents. It's seen as a business. It's treated like insurance, and they are not zero rated in terms of taxation, which disables the ability of securitizing loans using anything other than landed property. You'd ask, are there any efforts? And I think my presentation, part of it, I want to inspire you a little bit and show you how to navigate when you're on the ground. There are actions which are taking place. Partly on the government, there have been policies in the area of monetary and fiscal reviews. Financial service providers, in a way or another, they have been coerced to look into agriculture. But also sometimes they feel that they can do business, and you see innovations in terms of products and mechanisms to reach out, including digital mechanisms. But they are also adopting the risk mitigation measures other than the landed property collateral. They are making use of de-risking tools. And lastly, on the ground, there are quite a number of non-bank financial institutions which act as catalysts, providing lending incentives to the financial institutions, but also technical assistance and hand-holding entrepreneurs. They facilitate blended finance as such. And I tend to feel it is important for entrepreneurs in this area of the world, in this part of the world where we know that accessing credit is a challenge, to make use of them. I'll provide some examples. Let me go through these efforts so that you draw some inspiration that there could be a solution, and the environment is improving, the business environment improving. In Tanzania, there have been monetary and fiscal policy reviews from 2019, I should say, up to 2022, which you can track one-to-one and see the results. And I'm presenting these ones for Tanzania, but I know in Kenya and Uganda, similar or near similar policies have been reviewed in the very specific areas, like in the statutory minimum reserve from 2019, the government has been reducing it, and one spot which we can look at a correlation with outcomes is the 1% reduction, and also the discount rate from 7 to 5. Both of these ones made financial institutions a little bit more liquid. There was also a reduction of the statutory minimum reserve requirement, and this one was provided to the financial institutions proportionate to the loans extended to agriculture. And wherever these financial institutions issued the loans at an interest rate less than 10, you know that our interest rates are high, 16 to 18, and in the past we have also seen interest rates knocking 20. And the regulator, because of the lot of hammering which they have received, they arranged for a special private sector loan facility, which took off in 2021, 2022, to the tune of about 1 trillion Tanzanian shillings, which is equivalent to around 400. I think it has grown to the tune of about 500 million US dollars, aimed generally at the private sector, but we can track it to the agriculture sector. There have been a reduction of the risk weighted on loans to agriculture so that the CAR, the capital adequacy ratio improves and the liquidity of the financial institutions are also raised. And there is an act which allowed the banks to have flexibility when handling COVID-19 affected borrowers. It was particularly for COVID-19, and what was happening there is that there was a lot of flexibility in restructuring non-performing loans, despite the fact that this was introduced for COVID-19, but you can trace continued utilization of that restructuring facility. And I think it's very important because when agricultural loans are evaluated, just like somebody selling bolts and nuts, many times the classification that this is a non-performing loan is very severe on the agricultural loans. And restructuring is one way of getting the financial institutions to lend. As I said, these examples are for Tanzania, but you can observe them also in Kenya and Uganda. And the responses from commercial banks have been positive also, and I'll pick only two. There are 50 commercial banks in Tanzania. I think the number is a little bit more or fewer in Uganda and Kenya, but these examples are typical, selected for particular purposes. One of them is the NMB. This is the National Microfinance Bank, and they provide facilities. Part of these ones which I'm presenting are the ones which have been influenced by the policies which have been placed in the ground. If you knock those at the NMB, you would find capital expenditure loans of between 3 and 5 years, working capital for 1 year, working capital and overdrafts for 1 year, and warehouse finance. Their pricings right now as a response to the incentives, when you borrow to the tune of about 1 billion Tanzanian shillings, we are talking about 400 million US dollars, the interest is 9%. This can change if at all. You can negotiate even better interest if at all you borrow more than that. There are some other fees, processing, insurance, and legal. Sometimes I look at them and feel that they are significant, but you ought to be prepared for those ones and plug in numbers in a way that your earnings from the enterprise would be able to cover them. And there are quite a number of other things. Let's say like the bank has established a special department for agriculture. It's equipping and manning that office with people who are knowledgeable of agriculture. There is a particular course which has been designed in Tanzania. It is placed at the central bank to churn out more people who are comprehending these value chains. And if you look at the trend from 2019, or let's say 2020, it's increasing. Right now, the volume of lending from NBC, it is to the tune of about 400 million US dollars, okay, to agriculture. And if you dig deep into it, it is the missing middle which are the beneficiaries. I've presented this NMB because it's amongst the biggest banks in Tanzania. It is full service commercial. It has 226 branches across the country, the biggest number. It doesn't compare with any other bank. The next is probably to the tune of about 100. That could be CRDB, and others like NBC have only 50 branches. It has very big number of employees to the tune of about 3,400. Over 4 million customer base, and it is listed at the Dar es Salaam Stock Exchange. And there is an element to it because the business acumen for agriculture has been improved because A2i's BV, okay, this is a no-fund kind wing of investment in Africa, financial institutions, owns or has carries 34.9% of the share, and the government of Tanzania another 30%, while the other shares have been floated in the stock market. And A2i's BV acquired the 34.9% stake by buying out a cooperative Rabobank, if you know the Rabobank. And I'm mentioning this because these are financial institutions which are really good in agriculture. And it gives you an inspiration that this bank is really working hard to equip itself from governance, shareholding, up to staff with agricultural knowledge. Another one is NBC, and I'll move very fast with this one just for one purpose. This is another very big bank, but it covers commodities which are very specific. You will realize that the biggest chunk of their portfolio goes to commodities like coffee, tobacco, etc. The interest rates are almost the same, 10 to 11, but they are into these commodities because they comprehend them very, very well. They also have a wing for asset financing, and they can serve different entities. And they have targeted clients, and they do loans up to the tune of about 10 million US dollars. They charge an interest rate which is pretty fair, but you have to understand that they have limitations in terms of where they can, which commodities they are very much comfortable. I'm just mentioning this one specifically because of the fact that it also has an injection from an international banking institution. This is ABSA South Africa and IFC. And these have brought a corporate culture in the bank, which part of it is to respect the lending areas beyond the traditional commerce and trade. And one which is coming up strongly is agriculture. Other financial institutions in Tanzania may have the same kind of response, okay, like NMB and NBC. And I'll just mention their names. They'll be there in the slides if I share, like the CRDB Bank PLC. I've left this one out because many of you would be knowing it. Danida had 30% shares. There is Equity Bank, Azania Bank, Exim Bank, and the Tanzania Agricultural Development Banks. What I'm saying is here, when your enterprises are on the ground, together with the de-risking agencies, which I'm going to present to you, this is a list of financial institutions who are being kind of facilitated. They're given special incentives to lend to the agriculture sector. And you might find yourself more comfortable dialoguing with the managers for purposes of accessing finance. And again, here the volume of lending by NBC is also high, to the tune of about 300 million US dollars. These figures have changed significantly. They were below 100 million US dollars only 2-3 years ago. Let's look at some other things like the contending with agriculture risk. This is de-risking, and specifically I've chosen PASS. This is a guarantee fund, 100% initiated and funded by Danida. It provides short, medium, and long-term credit guarantees. It focuses on all nodes of the value chain, and it supports enterprises with their appraisals and evaluation. You can get some intellect about the industry when you interact with an agency like PASS. Of course, they have their eligibility criteria. It should really be commercial. You should prove that you can generate a cash flow adequate to repay the loan, and they can cover they can help you with the collateralizing or securitizing the loan up to 80%, if at all that enterprise is gender biased towards women, okay, whether it's owned by women, or it employs large numbers of women, or it sources produce, let's say it's an off-taker, it sources produce from women producers, etc. So the guarantee could go up to 80%. This is a big relief to the to many of the enterprises on the ground, but they're also cautious about the environment. So greening and supporting youth are positive elements. If at all you have them in your enterprise, then you will have. And you can see that in 2022, the principal which was outstanding was to the tune of about above $300 million US, which is being guaranteed by something like to the tune of about 60% by PASS. So you can imagine there was a time when PASS was securitizing to the tune of about 10 to 15% of all commercial lending in Tanzania going to agriculture. So I'm suggesting when you're on the ground, it is worthwhile having a discussion with PASS, even if it doesn't end up with a guarantee. Some intellect can be provided. Another innovation is the leasing finance, which has been pursued in the country. I'll give very quickly two examples. One was PASS. The PASS Guarantee Fund experienced high guarantee calls in mechanization, machinery, equipment, and agro-processing. They were failing badly, and that was the time when I was chairing the board. And so they decided for equipment, go away from guaranteeing loans and try to facilitate leasing. It started slowly, but now it's a leasing company. And they do traditional lease where you have a lessee, leaser, and supplier, and an agreement is reached upon them. This one resolved a lot the complacency of maintenance by the borrower, but it enhanced the aftercare services by the suppliers, and it has reduced the challenge of bad performance very much. They serve also value chains. They approach a value chain and would lease finance from producers up to the agro-processors. And it is performing very well. In the period of 2 years, 2022, the data, you could see that every parameter is growing. The number of clients is growing from 102 to the tune of 400. The disbursed lease has also grown, and also the outstanding portfolio is also growing. And I've given you only two figures. This is not a very old part of PASS, but it now really generates profit. It has already broken even. And as you know, guarantee funds usually don't make much profit. They are vulnerable to losses and when things go bad. It seems as if PASS is supported a little bit more, it is possible for the lease company to be the cash cow for that organization. And all the earnings, all the profits from the leasing company could be plowed back to the guarantee fund. Another one is EFTA. I won't spend a lot of time here just for the purpose of saying that leasing is picking up. PASS started, but other companies are coming up. This is equity for equity financing for Tanzania. And it is an organization which is supported by partners like AgDevCo, Africa Enterprise Challenge Fund, CodeAid, etc. They also provide equipment. And in this slide, there are quite a number of the different type of leasing which they provide. My intention is just to show you that if at all it is equipment from primary production up to agro-processing and so forth, the option might not be the direct commercial lending. You could also opt for these other avenues of financing. Lastly, let me end up by saying that non-bank financial institutions are also playing a very good role, and I'll give two examples also. One is Aseli. Okay, they have a mission to grow SMEs. Okay, they provide incentives to the financial institutions, and for qualifying loans, they can place qualifying loans which have a size between $25,000 US up to 1.5 million. They can place 2 to 8% of the loan value into a reserve account at the financial institution. You could look at it as a guarantee, but the only difference is that Aseli doesn't do it like the way PASS does. They don't reveal it to the clients. They are afraid of the moral hazard which is inflicted if at all the borrowers know that their loans are secured. But they are partnering with the various financial institutions which are also working with PAS, like the CRDB Bank, NMB, TCB, Tanzania, and the others. What you need to know is what are the things which these blended financing incentives providers want. So an entrepreneur on the ground, once they understand these banks have a facility from ASELI, and they approach them with proposals and write-ups which fulfill some of those requirements, then you can access. Another one is the Africa Challenge Fund. This is also there for blended finance, and it supports innovative enterprises, and they provide blended financing in the real sense of it. It is matching grants proportionate to the loans which they acquire from financial institutions, but they also help a lot in terms of articulating your business enterprise and so forth. They have windows for applications on the ground, etc. I'm not encouraging purely commercial entities to be chasing donor money, but I'm looking at it in a way that once you start interacting with such blended financing facilitators, they give you the ability to understand better how you can access loans from the commercial loans. And that is the only reason I would encourage somebody to interact. I've presented two, but there are dozens of these ones. The Matchmakers Fund on the ground has a small and medium enterprise facility which does the same. So when you're on the ground, it is worthwhile to explore non-banking financial institutions which facilitate blended financing to be able to be handheld. The results for all these efforts are good. In terms of annual growth of credit, we have observed between 2022 to 2023, like agriculture, lending has gone to the tune of 40%. But I should say that it seems as if the overall growth is for the whole lending towards private sector, okay? And in it, you also find agriculture having grown. If you look at another slide, this one I do present it for purposes of showing that different data sources provide. This one is by the Bank of Tanzania, the local regulator. This colored one is by the World Bank, and this is 2023 figures of around September 2023, very current, you can say. And what it says is that if you look at the period between 2019 up to around 2021, there was stagnancy in terms of growth in lending. But from 2021, when those monetary policies were being instituted until now, there has been a tendency to grow. But it is overall, the different categories are growing at different rates. At a point of time, when we picked the initial graph, it was agriculture which was growing the most. This is the brown colored one. In conclusion, credit access challenges is real on the ground in Eastern and Southern Africa. It is acknowledged by authority, both policy and operational factors matter. The trend is encouraging, however. Regulatory frameworks are being improved. Financial institutions and catalytic agents efforts are very apparent on the ground. A selected set of financial institutions can accommodate demands in Tanzania, and I've mentioned these ones several times. They'll remain on the slide. So it is important to explore them, approach them knowing that they are being eyed by policies to try and facilitate them so that they serve agriculture better. But I also say, and I put in, however, that make use and deploy facilitating agencies for guarantee funds like Past Trust. There is also Africa Guarantee Fund, which Danida has capitalized. Engage leasing companies for any equipment and machinery which you need. They will provide better conditions, and they are sympathetic to the challenges which you have. The aftercare services and diversity of equipment you can get. You get equipment which you are sure that on the ground it can be supported and provided for in terms of services. Explore donor-funded facilities that handhold entrepreneurs. I've exemplified these ones with ASELI Africa and Africa Enterprise Challenge Fund, not for the purposes of chasing donor money, but I believe interacting with them, they will open eyes of entrepreneurs on how best to interact with financial institutions. Thank you very much for your attention.
Thank you very much, Andrew, for providing this insightful overview. This is highly interesting to us. And I'm particularly happy of the opportunities that you outlined. I think everything seems to go in the right direction. That is extremely positive. So please, if anyone have questions, raise your hand. If I can't see your hand, you can just interrupt. If you have any questions for Andrew. In the meantime, I have one question. So,
Yes,
and this may be one question that relates more to governance. So when you look at finance opportunities for smallholder farmers, and we are in a situation with 7 of our company partners where they work together with cooperatives. So what are the opportunities for a cooperative to provide collateral that is satisfactory to these lending institutions as a cooperative?
Okay. Do I pick 2 or 3 and respond, or I go one after the other? I'm very verbose. If I start speaking about cooperatives, others will read a lot.
Okay. Okay. Helen.
Any other
Helena?
question?
Yeah. Thank you. My name is Helena, and it is slightly sidetracking, but I work in Zanzibar doing the energy efficiency strategy, and obviously energy efficiency cuts across all the sectors, also agriculture. So my question is twofold. Does your presentation, when you talk Tanzania, also include Zanzibar? Or could we have a one-on-one later where we talk a bit about Zanzibar? Thank you.
Probably I take these 2 first. Oh, there's
Yes,
one more.
yes, please.
I want to ask. Okay.
Or you can also answer, and then we go ahead at the.
Okay. In terms of cooperatives, I think the most disturbing part of there is the history of cooperatives in Tanzania and how they were institutionalized during the socialist era. So you find remnants of top-down kind of command economy regulatory framework for cooperatives to the levels that they don't present themselves as very lucrative commercial entities. Again, the only thing which I can say is 2 things. One, there is a very strong drive towards making sure that the cooperatives behave more as business entities than agencies for taxation, collecting cess, etc., etc. I do remember at the last meeting which I was attending, and we were with the Minister for Agriculture, he gave a list of many cooperatives which had millions of US dollars assets in terms of warehouses, machinery, equipment, land, etc. And they were not being able to make effective use of it. So what I'm saying is that if you are an entrepreneur and you end up to work with the cooperatives, accept to shoulder the burden of assisting these cooperatives to transform from agencies of cess and tax collection and open their eyes to the business acumen and opportunities which they have in front of them, bearing in mind that they normally have very idle assets lying out there without being made use of. You won't be stepping out of your mandate. And believe me, the Commission for Cooperatives and also the Ministry of Agriculture for the cooperatives which are under the agricultural production would be very, very happy to serve you and help you in helping them, help you, facilitate you so that you help them in the kind of transformation which is required for the cooperatives. But you are right. It can be very, very frustrating to work with cooperatives because of the mentality of them being regulators or cess collectors, tax collectors, etc. With regard to Zanzibar, Yes, like the organizations which I've mentioned, let's say CRDB, NMB, PASS Trust, and also PASS Leasing. They have an arm and they outreach to Zanzibar. However, I should say it is a particularly challenging sub-market because of the promotion of Islamic banking there. Okay, so you would always find that you have to be aware of the fact that to the tune of about 70% of potential clientele base whom you would want to work with would wish that you have Islamic products, Islamic banking products which are there. And therefore, my presentation is very much covering the whole of the country of Tanzania, only that probably I haven't been able to have particular examples and how to go about when you have to save Zanzibar. And principally, it would be because of the desire or the promotion of Islamic banking in that particular sub-region.
Okay, thank you very much. We have two more questions. First one from Ulla Balle, and then one from Anders Frigaard. Please, Ulla, go ahead.
Thank you, Thomas. I'm so happy to realize and the big improvement, in Tanzania in terms of especially also the incentives for the banks to actually lend to agriculture. And congratulations, Andrew, for the great the great work in PASS. I actually was part of, as you remember, maybe to start the initial guarantee fund with PASS and CRTP at that time, long time ago. Anyway, to my questions, I listened to also another webinar with the CEO of CRDB Bank the other day, and he mentioned that they had managed to start a sustainability bond for more, climate green initiatives in agriculture. So I was wondering if there are any incentives also in terms of greening agriculture, especially also for smallholder farmers. And as we know, the smallholder farmers, in terms of what they can access, is typically not affordable. So in the cooperatives, it may be aggregated level, it may be easier for them to access funding for various, investments. One of the problems that I've found a lot in terms of agriculture and the banks is also the understanding of the bank financial sector on the seasonality, that, you cannot somehow structure a loan that have monthly installments because the farmers cannot do that, right? They're seasons in farming, and the whole risk about especially weather and climate affecting, we were talking about El Nino this year, and that can wipe away, the whole season of income for smallholder farmers. So are there any initiative in terms of looking at those, minimizing the risks in terms of insurance or whatever, financial products as well, to minimize the risks for the farmers, to ensure that they have, a more steady income? And also in terms of farmers investing in longer term equipment like tractors or equipment, you mentioned it. Typically, it's not affordable because the loans are very short term, and it's not like long term investments, right? Here in Denmark, you can probably have an investment, or loan or financing which is 10 years. That is very, very rare in East Africa. Sorry, lots of questions and talking, but
yeah.
Let's also take the question from Anders Frigaard, and then you can answer afterwards.
Okay.
Anders,
okay, thank you very much. Thank you, Thomas, for arranging this talk, and thank you, Andrew, for a good presentation. I'm from IFU, the Danish Investment Fund. We are quite involved in, among others, in agri-finance in Uganda, which of course is a similar structure to some of the ones you have mentioned. Just two questions. I think there's a lot of initiatives here, right? And many of them are kind of institutional bodies involving in a commercial market with some kind of governmental support or NGO support. And mainly also it's for short-term loans, so it's really for working credits. And of course, where there is another big need is for longer-term credits for doing real investments in machinery and equipment and so. So that was just maybe to have your view on that. If you see any initiatives on that area that works to finance, for instance, machinery over 5 years or something. If you see some of that in some of the countries. And then the last question was, if time allows, I know we are running later, but I was actually surprised that you mentioned that in Tanzania there are interest rates down to 10% even for farmers. So compared to at least to what we see in Uganda, that's very, very low. So if you could comment on that, how is that possible for them to offer loans on such a cheap rate? So thanks.
Okay, thank you. Let me knock off the 10% interest rate. This is the interest rate you can access at those financial institutions which I have presented there, and they are directly a response to the monetary policy which was instituted in 2021 onwards, and there was a 1 trillion kind of fund where the financial institutions could % interest, and the requirement was that it should be lent to agriculture, and they should not onward charge an interest rate above 10. It has worked very, very well. And that's the product which I have presented for you, for entrepreneurs, because it's not very much known. But yes, if at all you knock the doors, the interest rates in Tanzania won't be very different from what it's Kenya and Uganda. But these facilities, these monetary policies which have been tweaked are the ones which have pushed the banks to have that growth which I've shown of 40% in that year. And amongst them are these facilities which are charged that low. So it's not that if the interest rate at the commercial bank in Tanzania are 10%, it is for these specific windows which have got a number of conditionalities and support mechanisms for the banks to be able to do that. I shouldn't be mistaken, actually. And if I look at the at Ula's questions in terms of greening, I should say yes. It is becoming a very popular kind of a petal in all the products, in many of the products, and CRDB has oversubscribed in the bond. They've gone far above what they had expected to raise. And you know there is a broad range of equipment and assets and nature of financing, which is captured by the greening, from solar energy and so forth, etc., etc. And to me, I don't think ultimate borrowers have found it very difficult to package an investment which demonstrates some greening, from agroforestry to equipment and so forth. So yes, it is a buzzword, and a positive thing is happening in that particular place. In terms of risks, yes, risks are there, and the risking mechanisms are many. I've given you an example of the guarantees which are there, but you will realize that the non-bank financial institutions, these blended financing elements, are also coming in with that kind of an eye. And besides the money, they also are very, including PASS and EFTA and things like AECF, ASELI, are also having very well manned wings of technical assistance. And it casts across many aspects, from the science of agricultural production to management to business governance and management systems, etc. So yes, given more time, we could really discuss on what are the types of risks from environmental and what is happening, what are the type of risks of management systems and governance of enterprises and what is happening, etc. Anders, yes, I'm glad that there is IFU around. They were a darling when I was sitting at the Africa Guarantee Fund, and I happened to know a lot of work which people are doing around there, and I worked very closely with Morten, actually. I think your question was if at all, there are also areas where I could point for long-term financing for besides, because substantial amount of the commercial lending is short-term. There's a small window within the financial institutions I've mentioned, like CRDB and NMB. They could go to the levels of 5 to 10 years with some loans which are for equipment, etc. But if you're eyeing that particular area, I think the development finance kind of institutions are the ones. And the only one which I know is really interested in agriculture with long-term funding up to big irrigation systems is the Tanzania Agricultural Development Bank. The only challenge is that they deplete their capital, their resources very, very easy. This is a bank which was supposed to be established with a capitalization to the tune of about 600 million US dollars. At the time when I was working with them, I think the capitalization was only 60 million US dollars. That is 10% of what really the initial feasibility had suggested is required. But that particular eye of long-term, 20, 25 years, equipments, irrigation systems, etc., is there. So I think if we continue agitating, capitalization of TADB could go towards providing that capital. But I would encourage very much exploration of the blended financing, where you get the short-term loans from the commercial banks like NMB, CRDB, etc., blending it together with long-term kind of matching grant, soft loan from non-bank financial institutions like ASELI, Africa Enterprise Challenge Fund, and others. And also the leasing institutions, the leasing, you can negotiate up to 5 years kind of lease, where if it's an equipment and so forth, you could get it from there. I think I've tried to touch almost all the questions which I had noted down. If I'm forgetting any, please remind me quickly. Yeah, I can look at the watch and I know people want to, I'm a little bit relaxed and free actually, but if at all, people want to leave, I should be careful that I don't continue talking.
Okay, thank you. You're right, Andrew. Time is running up, so and we need to stop. We can always facilitate contact between those of you who are interested and Andrew. Andrew, thank you very much for sharing your insights. It has been very interesting to us. So thank you very much for that. Let me just do, before we end, very short advertising for our next A2i talk. That will be on 8th of December, where we have Florence Charamba Christensen, who will speak about some of the cultural differences that exist between East African and Danish company practices. So that is for our next A2i talk. But once again, thank you, Andrew, so much. It has been highly interesting.
Thank you very, very much. I wouldn't go without saying this. And if you look at the slides, you'll see the name Diligent Consulting Limited. This one was not a contractual arrangement, but when you're on the ground and you feel that you need somebody on the ground who can open doors, who can make connections, who can inspire you or console you when you're really low with all the business challenges, Diligent Consulting is a small portfolio which can also work with you. Thank you very, very much.
Thank you. Bye-bye.
Thank you very much. Bye for now.